We've got Alistair Milne. He's with us. He's a senior finance lecturer at London's Cass Business School. He's also worked for the Bank of England, Her Majesty's Treasury, and the government of Malawi. Alistair, thanks for coming in. OK, the nub of this whole crisis in Greece is, you know, how do sovereign credit default swaps trading affect a country's cost of financing?
Well, I'd say the nub of the crisis is that it's a country that doesn't have the tax base to support the amount of spending their government's putting in.
Everything's been laid at this door, hasn't it? That these CDSs affect the way that the countries can borrow. What's, you know, is there any proof out there that there is a relationship?
No, there's suddenly these allegations have come up that credit default swap markets are somehow part of the crisis. They're the smoke, they're not the fire. So a credit default swap is a tradable insurance contract. If you have to pay a high price for insurance, it says the people trading those contracts think the risks are high. And in the Greek case, that sounds about right. So, as I say, it's the smoke, not the fire.
Right. The fire is?
The fire is the poor fiscal situation in Greece, and at root, it's the weaknesses they have in collecting taxes and covering the cost of their government spending.
So what's under discussion here at the European Commission right now?
Well, I think regulation generally is still very high on the agenda, and I think there are a lot of sensible things being done on the regulatory side, but also some stuff which is much more political and I think being done really from a point of view of ignorance rather than understanding. So you mentioned hedge funds, and that's another good example. There's no reason to really argue that hedge funds have been a big cause of problems in the past 2 years. So why the strong urge to regulate them? I think that doesn't seem to me to be a priority. Credit default swaps, yes, there is a problem with credit default swaps, but it's about the insurance company that sells them. You've got to make sure that somebody who sells a credit default swap...
Called naked swaps is what we're talking about here. So this is what Angela Merkel was referring to as you take out insurance on your neighbour's house and you've got an incentive to burn it down.
In the case of Greece, I really don't think that's relevant because there's no... we're not talking about...
Yeah, we've discussed that.
Yeah, we've discussed that. There is a bit of a case when you have corporate restructurings, and I think it's quite reasonable to argue that the people who sit round the table to discuss the restructuring of corporate debt should be the cash-only investors. I don't think people holding the CDS contracts who stand to win from a quick failure should be there involved in the corporate governance. But that's quite different from banning the product altogether. That's about who's round the table when you're discussing a restructuring.
OK, Alistair, just playing devil's advocate as well. Wall Street, parts of London as well, the city, say that these CDSs reduce risk and generate profits. Discuss.
Well, it's a matter of who sells them. Say, if you buy a CDS from, say, AIG or a monoline insurer, and then you discover the insurance company you bought them from is basically in bust, then that CDS is not very much use to you as a protection. So you've got to make sure the people selling the contracts have the wherewithal to fulfil their obligations.
We have to have simultaneous regulation, don't we, with the US and Europe?
No, actually, I don't totally agree with that. I think it depends on the product area. Something like hedge funds, which are very footloose, they can be anywhere in the globe. You know, they'll go to the Bahamas if they have to, wherever. So you've got to have a coherent global approach. A lot of the core banking, commercial banking, at the end of the day, it's very national. So I think there is room to go down a national route.
Is that what you argue in your book, The Fall of the House of Credit?
Well, I very much argued that banking has to change its culture. And I think the banks have been remarkably slow, I think, to push that themselves. I think the key focus is being customer-focused as opposed to being driven by short-term profits. And we've seen some signs of that in the industry, but not enough.
Thanks very much indeed. Alistair Milne there with his book, The Fall of the House of Credit.